capital gain harvesting. Hey, I'm Kaleb, founder of 10 Talents Financial Planning, and I'm talking to you today about capital gain harvesting. Now, if you are in the personal finance space, if you're an advisor or you're a do-it-yourself investor, you may have heard of tax loss harvesting. This is where you sell investments at a loss to be able to take those losses and save on taxes on your tax return. This is really not saving on taxes, truthfully. This is just deferring your taxes, but that's another video. This is about gain harvesting. So what I want you to be aware of is in our tax code, you can sell investments for a capital gain, a long-term capital gain, which is if you own the investment for over 1 year, 1 year and a day. It's a long-term investment, long-term capital gain for tax purposes. Now, if you have a long-term capital gain and your income is below certain thresholds, so it's different for single versus married filing jointly. For married filing jointly, you're right around $80,000 is the threshold, where if your combined income, so this is all taxable income, W-2 wages, self-employment, throw it all in there, interest, dividends, and capital gains. If all of that together is below the 80,000 mark, it's actually a little bit higher because of the standard deduction, but we're not going to get into the weeds. If you're below that threshold, guess what? You can pay 0% federal long-term capital gains tax on that gain, that investment, that stock, or that mutual fund that you sold in a brokerage account. So you might say, well, Kaleb, I don't make, my spouse and I, we don't make over $80,000. Or excuse me, we don't make under, we make way over. Even if you have two spouses making 60,000 each, that's 120, so we're way above the limit. Yes, you are. However, you need to realize this because if you change jobs, if you take a sabbatical, if you take time off of work, if you're without a job for a certain period of time, ding, 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 you might be below these thresholds, either as an individual, which is about half of the 80,000, or as a married couple filing jointly. On your tax return, you could have years where you drop into this zone. If you don't sell investments at a gain to harvest at the 0% capital gains tax rate, you're missing out. You don't get to go back. You don't get to relive that year again. So this is just a huge, massive value add opportunity in just kind of those random down income years, or as you head into retirement, you go into full-time retirement, this could pop up. One spouse leaves the workforce to go be at home full-time. Both spouses get laid off. I mean, there's a silver lining to every cloud, right? And if you're aware of these strategies, you can take advantage of them. So again, capital gain harvesting, there are income limits to be aware of, but if you plan it correctly, you can harvest gains, sell investments at a gain in the 0% tax bracket. So I hope this is helpful for you today. If you liked the video, then like the video, smash that like button, and subscribe to the channel so you can be notified of new videos on topics like capital gain harvesting. Thanks so much for watching. I'll talk to you later. Bye now.